What do you think Cathie Wood's views are about Tesla stock, at least for the near term? Star investor Cathie Wood has always been known to be a strong Tesla proponent. That said, Cathie Wood's predictions about the leading EV company's stock are constantly watched. You surely would not want to miss this info. Cathie Wood, who invests in companies engaging in disruptive innovation, made millions amid Tesla and other favorites surge in the early days of the pandemic, before a brutal 2022 sell-off wiped away ARK's gains. ARK owns about $487 million worth of Tesla, its fifth largest holding, most of which is in its signature ETF, which has added more than 300,000 shares of Tesla to its portfolio over the last month. Though an unfavorable macroeconomic environment and elevated interest rates drag down the market as a whole, Tesla's decline largely coincided with Musk's purchase of Twitter, dedicating much of his time and financial resources to the social media company, much to the ire of Wall Street. Wood has remained bullish during the downturn, predicting last month Tesla shares would reach $1,500 by 2027, representing a more than tenfold increase. Although Tesla is undeniably facing numerous issues today, Cathie Wood said Tesla's stock has miles to run and could rise to $1,500 in the next 5 years. "I think there are people who don't buy his cars now," she said in a Barron's interview, going on to refer to price cuts on Tesla's models. "But if he does what we think he's going to do on the cost side, there are a lot of people who will use economics as their guide, and I think there are a lot more of those people than there are of the naysayers around Twitter." According to Wood, there are three sources for the increase in their estimated price target. The first was the emergence of the Tesla killers in the market. Because of this, Wood and her firm ARK Invest expect a Tesla market share to go down from 17% globally, including China, to something lower. However, it instead went up to 18% in electric vehicles. So what we're learning is Tesla is just so far ahead of the pack, and I'm talking about the BMWs, the Mercedes, as far as range and other important metrics when it comes to electric vehicles, said Wood. She added that Tesla's battery cost is 3 to 4 years ahead of any other auto manufacturer in terms of cost declines. So every other auto manufacturer will, if they want to be competitive with Tesla, if they want to be competitive like for like, they will have to sell their cars at a loss. At the same time, they're losing their internal combustion engine business, so there they've got a big problem, Wood explained. Most other auto manufacturers, unless they want to lose money on the cars, most are not going to be able to keep up with or to reach Tesla's combination. So that's very important from a performance point of view and a range point of view, said Cathie Wood. When asked about her thoughts on Tesla in 5 years, Wood said that compared to other auto manufacturers, Tesla definitely has an edge. She said that if one analyzes cars not by brand but by range and power combination instead, Tesla is the biggest pick among them all. Still, she said that most famous car brands like Volkswagen and BMW have done wonders in the last few years. It is just that Tesla is way ahead of them in terms of the range and power combination. Wood said that most other auto manufacturers are not going to be able to keep up with or reach Tesla's combination unless they want to lose money on their cars. Wood emphasized that that's very important from a performance point of view and a range point of view. When asked about her thoughts on large corporations competing with Tesla in electric vehicle production, Wood has this to say: "They are failing miserably. Branding is something different. These other auto manufacturers have brands and a lot of brand loyalty, but I think as consumers start to shift from gas-powered to electric and look at the specs of the different cars," says Wood. She said that although they might still be persuaded by brands only, they won't have as good an electric vehicle as Tesla will provide. In a January 7th tweet, star investor Cathie Wood said that the EV opportunity alone is enormous, in a response to ARK Invest Director of Research, Autonomous Technology and Robotics, Sam Kouros' tweet. In the tweet, Kouros said that Tesla's margins, superior drivetrain efficiency, and low battery cost should make it one of the best positioned to weather any cyclical downturn for autos. As it has done in the past, it can be the first to lower prices, which puts pressure on other automakers, the ARK executive said in the tweet. To this, Cathie Wood said that according to ARK's CFA Tasha Keeney, Sam Kouros, and ARK's research, Tesla does not need autonomous ride-hail to be a success. According to Wood, Tesla's EV opportunity alone is enormous. Presenting ARK's research, ARK's Director of Investment Analysis and Institutional Strategies, Tasha Keeney, said in a tweet, "Removing autonomous driving and any form of ride-hail, which we believe will be more than 60% of Tesla's value over the next 5 years, our 2026 price target would become roughly $500 a share post-split, based on EVs alone, more than 4x increase from current price." It can be noted that ARK Invest published the Tesla valuation model in mid-April. ARK's updated open-source Tesla model yields an expected value per share of $4,600 in 2026. However, note that the Tesla model was published before Tesla executed a 3-for-1 stock split in August. Today, Cathie Wood says she's as bullish on Tesla as she's ever been, and even sees the stock up fivefold in 5 years. In fact, ARK continues to feast on Tesla shares. Tesla is the number 3 holding in asset manager Cathie Wood's ARK Innovation ETF, trailing only Exact Sciences and Zoom Video. After several buys in January, famed investor Cathie Wood kept piling into Tesla and bought more of them on January 18th. ARK funds purchased 49,983 shares of Tesla on January 18th, valued at $6.4 million as of that day's close. This means Wood has absorbed 806,663 Tesla shares in January alone, valued at $103.9 million as of the January 18th close. Although Tesla shares have plunged 58% during the last year amid worries about production and demand issues, Wood sees big gains ahead for the stock. Just from electric vehicles, there could be almost a 5-fold increase in this stock during the next 5 years, she said in a webinar cited by CNBC. And if you believe in autonomous cars at all, it's closer to 13 times during the next 5 years. So we are as bullish about Tesla as we have ever been. 5 times the recent price would be $653, and 13 times would be $1,699. The company has implemented big global price cuts, and Wood thinks that's a smart strategy. Tesla is going to be very aggressive in pricing, she said. Tesla can afford to do this. It's got the lowest cost structure, and it's innovating the most aggressively. The other auto manufacturers will have to follow these price declines, but it will hurt them from a margin and profitability point of view quite significantly. However, there are still considerable concerns about Musk's Twitter distraction, as some call it, referring to his Twitter acquisition as well as his controversial tweets. Wedbush analyst and vocal music critic Dan Ives told Yahoo Finance, Musk set off this 5-alarm fire on Tesla stock, and he's the only one that can extinguish it. It's a perfect storm between the Musk Twitter fiasco and now demand cracking. During his recent testimony as part of a Tesla shareholder lawsuit, Tesla CEO Elon Musk said he thought it was absurd to suggest the content of his tweets could impact Tesla's stock price. To defend his point, Musk pointed to an example where Tesla's stock price apparently rose after he wrote a tweet saying he believed the stock was too high. Though normal observers may read that as an admission his tweets can impact stock prices, Musk said that connection could only be drawn if the stock price went down after he claimed it was too high. Just because I tweet something does not mean people will believe it or act accordingly, Musk said. The CEO went on to say he did not see any casual link between his tweets and Tesla's stock price. Overall, ARK's 2026 price target for Tesla stock would be around $500 per share, more than 4 times its current valuation based on its EV business alone. The projection is adjusted for the 3-for-1 stock split that became effective on August 25, 2022. This represents additional context to the 2026 pre-split price target of $4,600 the firm announced in mid-April 2022. ARK's analyst Tasha Keeney noted that the firm is removing autonomous driving and any form of ride-hail from the valuation framework. The firm believes that these 2 factors will drive more than 60% of Tesla's value over the next 5 years. She further noted that the $500 per share projection is more than a 4 times increase from the stock's current levels. Subscribe to this channel for more Tesla stock predictions.